on then, let's talk to SK Bajpai, who's the Senior VP Finance and Legal and CFO at GSFC, about their numbers. In fact, you do have the revenue that is quite steady. EBITDA that was up 75% thereabout in the first quarter. And you do have urea sales that have dropped 73%. Fertilizers, of course, facing headwinds. So let's take the conversation then forward with the management of the company. Sir, thank you so much for taking time out and joining us. First things first, I wanted to ask you about the reasons for your EBITDA margin uptick. Do you think that this is sustainable also at this point in time?
Yeah, certainly. Because the whatever efforts we have put in for cost optimization by way of capitalizing the solar power project at Charakna by the company, and one of the solar power project capitalized by our sister concern GIPCL, in which we have the 50% stake, and we are getting 37.5 megawatt power from GIPCL and 15 megawatt power from this solar plant. So power cost has been reduced a lot. Other than that, we have the urea revamp facility, in which the energy efficiency was achieved, and the natural gas consumption in the urea plant has been as per the target energy norm fixed by the government of India. So this all led to the reduction in the raw material consumption cost, and due to that, this EBITDA margin has been reaching to 9% from the current levels.
All right, and I also wanted to talk about your fertilizer EBIT. That's also something that's increased beyond trading and P&K realizations. Give us a little more color about this, because what specific operational or market factors do you see as the key triggers for this then?
Yeah, actually the DAP production is not cost economics in India, and the prices of the DAP in the international market, as well as phosphoric acid, the key component of the producing phosphatic fertilizer in India, is very high. It is ranging around $12.58 per metric ton. So DAP economics is not there. So we have switched over to the other NPK grade of fertilizer like ammonium phosphate sulfate. And that gives a good margin in the at our Sikka plant. So this is the key factor for the fertilizer growth. Other than that, ammonium sulfate is one of the products which is we produced as a byproduct in the caprolactam plant. So that is also giving a good margin, and we have capitalized recently this ammonium sulfate 4 plant. So the production capacity is very good, and we are there was no shutdown, and material was available. And thanks to the monsoon was also a little bit early, so we could sell these high margin products in the market, and by through that the fertilizer segment is doing really well.
Well, absolutely, and I wanted to talk about the raw material trends as well. But before I do that, sir, I want to understand what you think about the urea sales as well, because there's a significant decline that we're looking at there, right? 73% thereabout due to trial sales exclusion as well as the stabilization issues. Can you give us a little more color when it comes to these issues, and what are the steps that you're currently taking to be able to mitigate this as well?
Yeah, as I told you, Urea 2 plant was under the revamping phase. So we have commissioned this project on 2nd June. So for the whole quarter, we were under the trial and production. Around 40,000 metric ton of the urea production was capitalized rather than showing as a revenue. That's why you can see that great downfall in the urea production as well as the urea sale. But actually, the trial and production was also available in the market, and we could sell that 40,000 metric ton of urea to the market, because urea is in the short supply. So, but it is not charged in the revenue due to trial and production. We have transferred into the capital side of the balance sheet. So that is the reason in the urea. But now it is established, and the new energy norm, whatever the fixed by the government of India, that has been achieved. And I am happy to share that after this commissioning of Urea 2, we are getting the very good production at a full capacity.
Well, absolutely. And you've also talked about the good monsoon, sir. So I wanted to understand, how is the company then positioned to capitalize on the favorable agri-import demand during the second quarter as well?
Yeah, I am quite hopeful that in the second quarter, we will put a much better result. because we have procured all the input like phosphoric acid, ammonia, and other raw material required to be produced APS and AS and other fertilizer grades of NPK. So we have already placed a lot of material in the market, which will be realized soon, and we will have a very good next quarter. As far as monsoon is concerned, it is very good. All the and the DAP and urea is in the short supply, so there is no problem as far as demand of fertilizer is concerned. However, we are hoping that in case of P2O5, like phosphoric acid and DAP, if there is slight reduction in the prices, which is prevailing at a very high rate, or it requires a critical examination by the government of India while fixing the rate of the subsidy, which is due with effect from 1st of October this year. And if there is some subsidy increase on the contents of phosphoric acid and sulfuric acid, because sulfur cost and sulfuric acid cost is also very high, and it has been risen 150% of the quarter to quarter basis, if you see. So if these things are taken into consideration while fixing the subsidy by the government of India, then it will additionally help the fertilizer industry and the company as well.
Well, absolutely. And I had a follow-up on that, sir, since you've mentioned that there's been a rise when it comes to some of these prices, sulfur as well as sulfuric acid. I wanted to understand if there are long-term sourcing strategies that you have. Are they currently in place? Can you give us a little more sense into that as well?
Yeah, sulfuric acid is the big content. We have the sulfuric acid 4 plants here in the fertilizer Nagar complex. However, it is in short supply because of the demand supply gap. And we are having this ammonium sulfate 4 plant, which is recently been capitalized, so sulfur demand is high. However, company has already put in this new sulfuric acid plants as a 5 plant, which is due to be commissioned in the 1 or 2 months, after 1 or 2 months. So there will not be any scarcity of the sulfuric acid. And the company will also be benefited by the own production of sulfuric acid rather than procurement from the market, where the prices are more than 10,000 rupees per metric ton presently in the market. So sulfuric acid requirement will be met by your own production, and this will benefit. This will give a good margin or better margin in the ammonium sulfate and ammonium phosphate sulfate production in the fertilizer complex.
Absolutely. And sir, before we let you go, I just wanted to get a sense of if you had any targets in mind when it comes to your revenue as well as margin. Of course, you've talked about the trajectory when it comes to margins, but is there a number that you can share with us on both counts there?
Revenue certainly will grow because looking to the DAP and DAP scarcity in India, we have already tied up 4 shipment of the DAP, and we will be receiving in the next quarter. So it will be very well consumed and accepted by the Indian market. So revenue top line will be grown very beautifully. But the bottom line, I cannot give you any number. But at least whatever the margin levels we have achieved in the quarter 1, that is achievable in the second quarter or maybe better than this.
All right, then, fair enough. So thank you so much for joining us and taking time out and helping us understand that. So the second quarter is going to be better, and that's the word coming in from the management of GSFC. That's one stock that is buzzing away in trade, 7% in fact uptick coming in on GSFC. But tell you what, let's take a look at some of the other counters that are then buzzing away in trade. Cummins India and KRBL are some of the counters